DocuSign is out with its latest quarterly results, growing revenue by 35% year over year to more than $2 billion. But many on the street are disappointed by the business continuing to slow down into the first quarter. Joining us now is DocuSign CEO Dan Springer. Dan, good to get some time with you here. This is the second straight earnings report. We've seen this big move in your stock after the results. And the notes that I'm reading out here this morning, they're really focusing in on your sales organization. What is the issue there, and when do you see this starting to stabilize a little bit?
Well, we talked about it on the call last night, Brian. We had an assessment coming out of Q3, whereas for the first time in ever for DocuSign, particularly after the incredibly strong 7 quarters before that, where we didn't beat our estimates. And so as we looked at what happened in Q3, we realized that coming off the pandemic highs, we weren't having the sales execution. And when I say sales execution, it's the whole company. It's not just the sales organization. We weren't having sort of the billings growth that we needed. And the initial sense as we looked at it was, as before the pandemic, DocuSign had a very strong and normal process of signing up customers, we call that the land, and then we go in, we drive adoption and success, and that leads to the expansion. They use more and more DocuSign. And as we found ourselves coming out of the end of the pandemic, we realized that some of that demand had actually been enhanced during the pandemic from our typical program, where people were coming to us with very heightened levels of demand to meet the needs they had during the pandemic. So then the company is now twice as large as it was less than 2 years earlier when the pandemic started, and we hadn't shifted. We'd gotten used to sort of that mode of meeting demand versus generating demand. And now we need to shift back to generation of demand. At the same time, and that's what people talked about a bit last night, we realized that at this new scale, we didn't have all of the senior leadership we needed to continue to grow at the attractive rates we've historically grown at. So we've made some changes to the organization today. We brought in some fantastic seasoned leaders in our North American business, and I should mention that our international business has continued to grow quite attractively. North America, where we've had some challenges. And so we brought in a new leader of our commercial business, brought in a new leader of our SMB business, and close to bringing a new North American enterprise leader in as well, which is fantastic. But I realized that at the same time, as we think about this new level of scale, we need a leader who's seen that sort of scale, taking us from $2 billion in revenue, as we did this last year, to $5 billion in revenue. So we've commenced a search for just that leader. So that's the core of the information.
Dan, does this situation turn around by the middle of this year, or are we talking about to see tangible improvement here? Is this a 2023 thing?
Well, fiscal 23 for us, calendar 22 is where we see meaningful improvement for sure. We've already seen the fact that we've kind of now dug in on this concept I talked to you before about sort of meeting the demand that was there, the heightened demand that we had, versus back to our roots of generating demand. We've already seen increased pipeline from those activities. And I think if you take a look at our the guidance that Cynthia Gaylor, our CFO, gave, you see improvement over the year in that billings performance, which will then lead to the revenue growth in the quarters ahead.
Dan, it's Julie here. Brian earlier in the show was sort of looking at DocuSign in the context of some other, in his words, bulging bicep stocks that went up during the pandemic and now have come down. Stocks like Peloton, stocks like Zoom that saw a big boom. And of course, DocuSign is in that category as well. So how should we be thinking of DocuSign in the context of a post-pandemic, or at least hopefully coming out of the pandemic kind of world versus some of those other companies?
Yeah. Well, it's hard for me to opine on all of the other companies, and each one that you talk about probably has slightly different characteristics. The commonality you pointed out is we got incredibly heightened demand during the pandemic. I think from that standpoint, that's a good articulation. In our situation, we feel in the long run, this is just a continuation of the transformation people are doing digitally with their business. As people come back into work, and I can tell you, having been in the office a lot the last couple of weeks and starting to see more DocuSigners coming back, I think it's going to be fantastic for our business, for us as the way we operate. But we don't think people are going to be going back to pen and paper. We don't think people are going to go back and say, I enhanced all my business processes with DocuSign. Now I want to not use DocuSign. We think it's just the beginning of that, next stage of transformation going forward. So we're quite bullish that whether in a pandemic environment or a non-pandemic environment, there's just intrinsic demand for people to make their businesses better with DocuSign. And as mentioned to Brian, what we didn't do is pivot fast enough in our execution, our field execution, as we went to market for that changing nature of the demand from sort of that explosion that you were talking about, or the bulging you were talking about that came from the pandemic.
And when you talk about now the pivot to having to sell that demand versus the demand sort of pouring in at you, where is the friction that you're seeing? In other words, is it that the companies who it made absolute sense for have already done this? Is it that companies are rebudgeting into different, they're putting money into different things now that we're coming out of this? What's the pain point for you guys?
Yeah, so if you think about our business, maybe think about across the life cycle of a customer, and I talked earlier about this land and expand. So we saw, again, very attractive. We had 60,000 new customers in Q4. We added 280,000 new customers across the year. I don't think there's a challenge of people saying, I want DocuSign. It's very early in the TAM. We think it's about a $50 billion TAM for the Agreement Cloud. And again, our $2 billion of revenue last year is obviously less than 10% of that opportunity, and we are by far the dramatic market share leader. So it is definitely early days, and we're continuing to see great adoption of folks coming in new. But sometimes people forget in the land and expand model, we got to do the work on the expand. So once we've got those first use cases in place, we then need to go out and talk to people about not only other places for core e-signature, but where they can use our e-signature plus products. That's things like Notary, that's things like Identify, DocuSign Monitor. And what we have not done as aggressively and as effectively as we needed is that outbound activity, mining the customers for the growth opportunity. What's really great about DocuSign is people tend to get a very high ROI. So when we execute, we get our customer success motion right, people want to buy more, but you still have to sell it to them. I think what we've realized is that we were not doing fast enough and aggressively enough that traditional expansion model. And so that's really where the focus is.
Dan, philosophically, should there be consolidation in the work from home technology environment? I know you recently struck a partnership deal with Zoom, but why not join forces with the Zoom and go to market with this mind-blowing next generation product?
Yeah, it's actually a question. We haven't spent a lot of time thinking about an industry consolidation play. I think that there's a lot of things in our business that we look at today and say we have so much room for growth. So we're pretty focused on that. We will always be open to creative and attractive ideas to make things great for our employees and to make things great for our investors. But at this point in time, Brian, I feel pretty laser focused on an execution work that I have to lead. And because I didn't see the pivot fast enough, so that's on me. And now I got to earn that right back again by driving the execution.
Dan, real quick, are you buying stock again, like you did last time when that window opens?
I will buy stock again. My window can't open. I think it's till Wednesday next week, but I will, these prices, absolutely buy more stock.